we are going to discuss about the monetary policy of Japan. The Bank of Japan is the central bank of Japan which decides and implements the monetary policy of the country, which is basically maintaining the price stability. Price stability is more important to them because it acts as the foundation to nation's economic activity. The stance of the monetary policy is decided by policy board makers in the policy board meetings, and they also discuss about the economic and financial situation of the country. They provide guidelines for money market operations and provide a future stance, monetary policy stance in the consecutive meetings. The Central Bank of Japan, it provides a daily amount. It provides a daily amount limit for money market operations, which allows them to choose a proper operational instruments for the monetary policy. Those operational instruments will be taken care by SOBI.
The central bank influences the interest rates by expanding or contracting the monetary base. There are three main instruments. One is open market operation, second one is the discount rate, and the third one is the reserve requirements. Open market operation, what it does is it involves with buying and selling of the government securities like treasury bills, company bonds, foreign currencies, etc. in exchange for money on deposit at the central bank. So those deposits are convertible to currency. So all this ensures that the money will be either entering to the market or it will be leaving the market circulation. The second one is the discount rate operation. What it does is this will be discount. In this way, the central bank can lower the interest rate it charges on discounts or overdrafts. If the interest rate is low, the commercial bank will be borrow from the central bank to meet the reserve requirements and use the additional liquidity to expand their balance sheets and increasing the credit available to the bank. The third one is the reserve requirements. The reserve requirements, what is basically is the bank has to keep a certain proportion of asset to their hand overnight. So either they have to put it in the vault or they have to keep it with the central bank. The banks only maintain a small portion of their assets as cash available for the immediate withdrawal. The rest is invested in the mortgages or loans. So the lowering the requirement, it will be freeing up the funds. That will be and if they are freeing up the funds, so that will be increase the loans and buying other assets. There are certain types of monetary policy which are the inflation targeting, the price level targeting, the monetary aggregate and the fixed exchange rate, the gold standards and the mixed policy.
Hello sir, we are here discussing Japan's monetary policy, and the Japanese economy, as we all know, has been an enigma for all economists since the past 2 decades, as they have been continuously at the same pace of growth, growing at less than 1% in the last 2.5 decades, wherein some economists also call the last 2 decades as lost decades for Japan because it has hardly grown. The wages of workers has hardly increased in the last 25 years, where it has stagnated, and the entire economy is facing a deflationary spiral. Just to give an entire context of Japan in the last 25 years, and maybe even going before that, and how the economy has fared on a very broader picture. I think what we can say is Japan from 1950 to the 1980s was growing at a very good pace, but then suddenly this period was accompanied with a lot of factors. For example, we have inflation accompanying it, we have the asset bubble accompanying it, and that's where the problem started. In the period between 1985 to 1990 is when they had steep slope of growth. But then we are forgetting one thing: they had an asset bubble as large as any country has ever seen. Tokyo's land prices were bigger than the entire prices of the United States of America, which tells the picture. Giving a better context as to what happened, the monetary policy at that point of time did not realize until it was too late, probably. Land prices were skyrocketing, and until 1989, when the prices were unsustainable, and the Bank of Japan ultimately decided that probably we should go for some tightening and cut down the money supply in the economy. That is the point wherein it all started. Initially, it was welcomed by the people because the housing prices had already skyrocketed, and it was simply not affordable for normal Japanese to afford a car, to afford a house. This asset bubble thereby was punctured by the Bank of Japan by a steep decline in interest rates, what they call it as uncollateralized call rates. If we have the graph of the uncollateralized the call rates, it would be something like this. Wherein this transition period is nothing but 1990s. After which we see that it has constantly pursued policies which would be unconventional all across the world. Policies like ZIRP, zero interest rate policies, were first started by Japan. Even the quantitative easing policy, which got a lot of traction all across the world after the United States pursued it, was initially started by Japan way long back in 2006, while the ZIRP was probably started around 1999, when the interest rates touched zero levels, and their targets of inflation were to achieve 1%. Even now they're struggling with a target of inflation at around 2%, but then still haven't received it. On later context, we shall probably discuss what the Japanese economy now has been doing with the new government of Shinzo Abe and the catchphrase Abenomics into the picture with its 3 arrows. What they are trying to do on a very broader level is to infuse a lot of money by terms of quantitative and qualitative easing into the economy so that the consumption of the entire public increases. But then some economists have had a contradictory view, saying that instead of increasing the consumption levels of households, what this zero interest or the negative interest policy has done is that there is a lot of uncertainty in the last 2 decades, wherein the present era of Japanese workers are completely uncertain. They have a mindset, it's an entirely mindset game, where a Japanese does not believe that something, an asset that I own today, will depreciate tomorrow. Which is why every penny that it earns goes into the savings, does not go into the consumption pattern. The primary reason lies here, wherein any stimulus given by the government is simply not working. And some economists have said that the transmission line of the monetary policy itself has broken down, and therefore anything that the Bank of Japan does cannot work. Wherein some more stimulus on the fiscal side primarily should be working, and there should be much more concentration from Shinzo Abe on his fiscal policy. To give a much broader and much deeper insight into this, my friend Sahib will tell you how Shinzo Abe is bringing about change and what are the policy tools which he has used since the last couple of years to get Japan out of the trouble, even though the trouble remains and we are yet to see when Japan will come out of this abyss.
After coming into power in 2012, Shinzo Abe introduced huge reforms in order to bring the country out of deflation. These reforms were termed as Abenomics, which basically constituted of 3 arrows: monetary policy, fiscal policies, and structural reforms. The monetary policy basically targeted in order to flood Japan with yen. There were 2 effects of this. The first was to increase consumer spending. The impact of flooding Japan with yen was high inflation, but at the same time, the factor which they've considered was people will start spending. The second impact of flooding Japan with yen was to decrease the value of yen with competitive currencies in order to bring more, making exports cheaper and hence increasing the exports to other countries. The second pillar was the fiscal policy. Shinzo Abe and his government has been spending a lot in 3 main aspects. First is the welfare. With 64% of the population in the working age and 20% of the population were aging more than the retirement age of 55, there is a lot of dependent population which needs to be taken care of. And hence, the fiscal policy is directed towards spending more towards the welfare policies. The second more important aspect of fiscal policy was to increase the infrastructure which is already there by increasing more spending in infrastructure. The primary impact of this was looked at as increase in jobs and hence increase in spending power of people. The third pillar is the structural reforms. The structural reforms basically wanted to have, with the structural reform, Shinzo Abe basically wanted to create an impact of increase of investments into Japan. They wanted to decrease the barriers of investment and thus increase the investment into Japan with people coming in and creating more and more job opportunities as well as more and more infrastructure in Japan. So, if we talk about what impact does the Abenomics have had in past 4 years, it's very short period to actually tell what this special economic policy has done. What we can see is that it had an immediate impact in the Japanese economy with increase in stock prices and creation of jobs to a certain level of extent. But yet, economists debate that the long-term impact, which was increase in investment, have not yet happened and are yet to meet the targets which were expected by the government.
As my friend Sahib pointed out currently, that since 2012, there has been a constant monetary stance of the Bank of Japan, which is in sync with what the government wants. Now, what has been the main aim or what has been the main go-to strategy of the Bank of Japan at this point of time? It has been QQE, that is qualitative and quantitative easing. The aim of the whole policy is to make sure that the 2% target of inflation that is kept, that should be reached by the government and the Bank of Japan when both of them work together. But one fact is that this 2% target, the government has not been able to reach it in the last 20 years. So the country has been in a constant state of deflation. Now, some of the main reasons why government wants to make sure that the 2% inflation target is reached is because of the fact that if there is a certain amount of inflation, which is good for the economy, then this inflation would in turn spur corporate profits, which will give widespread employment to people. This is currently what is desired. Now, some of the pillars of the strategy that is employed, that is QQE, is as follows. First is the interest rate. As far as the interest rate is concerned, currently the interest rate when financial institutions keep their money with the Bank of Japan is negative of negative 0.1%. The second strategy is quantitative strategy. In quantitative strategy, the Bank of Japan currently does money market operations worth 80 trillion yen. As my friends I pointed out that there is an abundance of yen in the Japanese economy at this point of time. And third is the qualitative nature. As far as qualitative is concerned, currently the Bank of Japan is buying huge amount of Japanese government bonds which are in trillions of dollars. Also, the bank currently buys not only also ETFs and Japan real estate investment trusts and other kind of corporate bonds and and commercial papers. They are doing this just to make sure that the supply of money or liquidity, as we say, is enough in the market. Also, one important thing that should be noted at this point of time is the fact that in all their policy statements, Bank of Japan has been very clear that we will do whatever it takes to make sure that the 2% target is reached. Now, to reach this 2% target, as Abhishek previously mentioned, the monetary policy has often failed. Now, since the policy transmission line is broken, what we ideally want is to make sure that something new is taken up which gives us the desired results. So in January 29, 2016, Bank of Japan came up with the idea of negative interest rates. Now, negative interest rates was to make sure that the policy transmission happens to the last person. That is the end consumer or the end customer has a negative interest rates or very, very low interest rates on the short-term borrowings. But banks are not really wanting to do it because if banks are not getting interest, then the whole concept of net interest margin and working of bank is turned up on its head. So what the Bank of Japan came up with was an idea that is currently being implemented in most of the European countries also, where negative interest rate is taken up. The first is this. This is the basic balance. On this basic balance is currently the current accounts or whatever money financial institutions have with banks. The reference date is the last year, that is the whole calendar year of 2015. Whatever was the basic or the average deposits, they were taken up as a benchmark. So on these basic deposits, an interest rate of positive of plus 1% was given to banks. On these micro add-on balance, this balance is basically the reserve requirements. So, as in India, we have CRR, SLR. So basically, these are CRR on which 0% was given. So hence, nothing was given. And on this policy rate balance, negative of 0.1% was given to banks. This was just to make sure that once Bank of Japan pumps in the additional liquidity, banks don't just sit on it. So anything that is excess, if banks are taking the money and then not deploying it in the real economy, then banks would have to pay around 0.1%. So this was an incentive for banks to make sure that the funds are deployed in the right amount and the way they should be. Now, coming back to the policy stance of the bank, since the bank is very clear that it has to do whatever it takes to reach the 2%, they are looking at even the external factors that may affect the growth in Japan. For example, the decline in crude oil prices, or the demand in less demand in commodity markets in the year 2015 and 16. All these things are the kinds of factors due to which the exports that Japan has, those kind of exports are not growing at a pace which was initially envisaged, due to which the growth in Japan is not coming as per expectations. So Bank of Japan is trying to ward off these threats also. In the subsequent policies, this happened in January. This happened in January 29, 2016. In the subsequent policy statements of March, April, and June, these stands were basically taken into account. Nothing much was done, so these stands were then carried forward. However, on September 21st, what was done? The enhancement of the current system was done. Basically, the ETF purchases, which were around 3.3 trillion yen, those were increased to around 6 trillion yen. Also, the fact that Bank of Japan is now willingly lending into US dollars also, just to make sure that anybody who wants dollars just to grow in their country or some other kind of investment, just that Bank of Japan wants to help those people also. So these are the two main factors. Also, the other point that was mentioned, that the fiscal policy currently is in sync with what the bank is doing. Even the fiscal policy of the government is also very expansionary. So once things like these happen, then it is believed that after the September push and the recent policy that has been taken, that this will give the required impetus. In September only, the bank did one another thing. In the new policy review, they came out with two very strong things. First was the yield control curve, which will be taken up by Mohit later. And second was the overshooting of inflation expectations. As previously mentioned, the consumer spending not only depends on the current inflation, but it also depends on what people perceive that the future inflation will be. So currently, Bank of Japan wants to make sure that the expectation of people is such that in future they expect the inflation to be there. So if there is inflation, so people are more willing to spend their money right now. So these are basically the two major changes which were done by Bank of Japan on September 21st, which will be taken up in detail by Mohit.
Now, taking some points further, which my friend Hardik has mentioned already, I would talk about the monetary policy statement in last 2 quarters and what has been touched upon in the statement. First is yield curve control. With the yield curve control, the bank is trying to cut down the real interest rate by controlling short-term interest rate and long-term interest rate. In the short-term interest rate, the bank is keeping the rate as minus 0.1%. And for the long-term interest rate, the bank is basically purchasing government bond yields, government bonds, to keep the 10-year Japanese government bond yield as 0%, which supports the existing policy of qualitative and quantitative monetary easing, which basically aims at price stability target of 2%, which my friend Hardik has mentioned already. Now, the basic idea of qualitative and quantitative easing is that it will reduce the real interest rate by increasing the inflation expectation and pushing down the nominal interest rate down. In the previous quarters, the inflation expectation has been declining, and the reason for that is the decline in crude oil prices plus the weakness in demand due to consumption tax regime in the Japanese government, plus the slowdown in emerging economies and the global financial market. Apart from these two major points, quantitative monetary easing and yield curve control, monetary policy statement has mentioned another major important point, which was the guideline for asset purchases. The bank basically will purchase the exchange traded fund and Japanese real estate investment trust. So that their amount outstanding increases at an annual pace of 6 trillion yen and 90 billion yen respectively. Bank will also purchase commercial paper and corporate bonds, keeping their amount outstanding as 2.2 trillion yen and 3.2 trillion yen respectively. And now the conclusion of the monetary policy statement will be given by Hardik.
All in all, Japan has been a conundrum for not only the economists in Japan but also for people worldwide. People have not been able to decide what would be a right policy stance at any point of time in the last 20 years and what should be the proper remedial steps that can be taken. So to make sure that the country is back on track and is on a growth path. But having said that, one thing has to be kept in mind, that there were some big factors which contributed to the growth of Japan from 1950s to late 1980s. And now those factors have fundamentally changed. First is the export market, which was there at that point of time. They had big Japanese companies like Honda and other companies. Those companies grew with those times. So with export markets and all the business that was available to those companies, that helped the country to grow. And second thing is age. Now the demographics of Japan is nowhere close to what it was 40 years ago. So the fact is that Japan has to accept that it is an aging economy, and the growth that has been there in the previous era of 1950 to 1980s can never be replicated now. According to some classical economists, the growth can come via two means. First is either the GDP growth can come via two means. First is either the population growth or the productivity growth. Now we know one thing for sure, that as far as population growth is concerned, Japan can't do anything about it. But the other part, the productivity, is where Japan has an edge over most of the countries in the world, because it has good scientists, it has good R&D base, which it has developed over the last few years, especially after the late 90s. So Japan can now target on the productivity growth that it can give, not only to itself but also to the world, because currently in the more isolationistic environment and where every country wants to be closed, in these environments, export and trade growth is not going to be viable for a really long amount of time. So if Japan wants to grow, it should focus on more productivity measures that enhance some of the radical measures that have been talked about. Have been one of helicopter money. So that is one thing in itself, because zero coupon bonds has not really worked. So how much would a helicopter money work is anybody's guess. Another important suggestion that has come is more inclusion of female in the labor force. Currently in Japan, the females in labor force are not really their figure is not really up to the mark. So if that increases, you have in a very small amount of time, you have a really large base of new people joining the workforce. That might reinvigorate the economy. So it's measures like these where Japan has to now look forward, not only monetary but also fiscal stance, even policy or cultural issues for that matter, have to be dealt with in a way which makes sure that Japan is on a growth path again. So all in all, the focus is now on Japanese policymakers to choose the best possible path. Thank you.